All right, let's get right into it. The stock market, by all accounts, should have probably crashed by now. I mean, you look at the sky-high valuations, the wild swings in commodities, it's all telling us something's got to give. And yet, it hasn't. So what is actually going on under the hood? Today, we're going to break down what the experts are saying.
Let's just start with the single biggest question that's on every investor's mind. This is a question that market expert Gotham Sheath says he gets asked constantly. And look, it's a great question, right? Because when you look at the surface, there are a ton of reasons why the market should have had a major correction already.
So to really get to the bottom of this, we need to understand that the market is basically caught in this giant tug of war. There are two massive opposing forces pulling it in different directions. It's a classic battle between fear and a very powerful underlying reality.
Okay, so on one side of the rope, you've got this very real fear. Valuations are just stretched. We're talking stocks, especially in the mid and small cap space, trading way above their historical averages. That is usually a huge red flag. But pulling just as hard on the other side is this incredible reality, a literal tidal wave of domestic money pouring into the market.
And this number, right here, is the key. Just think about this. Over the last 2 years, domestic savers have pumped a staggering $153 billion into the markets. Now, during that same time, foreign investors actually sold off $20 billion, but that domestic money just completely swallowed it up. It's created this strong safety net that's basically preventing a crash.
So with all this local money searching for a place to go, a lot of attention is now turning to a part of the market that's been in the doldrums for years, small-cap stocks. After a really long stretch of just not doing much, everyone's asking, is there time to shine finally here?
And this is why everyone's getting so excited. I mean, look at that chart. After 6 straight quarters where earnings were either negative or basically flat, they're now expected to explode by a massive 35%. That is a huge, dramatic turnaround.
Now, before we get too carried away, we have to put that huge number into perspective. Yes, 35% growth sounds amazing, but it's coming off of what they call a depressed base. The past couple of years were so bad that pretty much any growth at all is going to look enormous in comparison. So that comeback story, it's a little more complicated than it looks.
And this quote right here really gets to the heart of the risk. Even after prices have come down 30 or 40%, the experts are warning that a lot of these small-cap stocks are still very, very expensive. So yeah, the growth story is getting better, but the price you have to pay to get in on it, well, that's still a big worry. Okay, let's switch gears. This brings us to another part of the market that's just buzzing with opportunity, but also a heavy dose of FOMO. And that's the incredible rally we've seen in silver. So what's the deal? Is this a real fundamental shift, or is it just a bubble that's waiting to pop?
At its core, the basic argument for silver is actually pretty simple and really compelling. You've got global demand consistently outpacing supply. And it's not a one-off thing. Supply is basically flat, while demand, mostly from industrial use, is going up by about 1,000 tons every single year.
So what's causing this demand to surge? Well, it turns out silver has become this absolutely critical ingredient in pretty much every major tech trend that is shaping our future. I mean, we're talking about everything from EVs and solar panels to those huge AI data centers being built everywhere. They all need silver.
When you understand those fundamentals, it's no wonder that long-term investors like Sridhar are so convinced. Think about it. He patiently waited for 5 years while silver did absolutely nothing. And now that it's taking off, he's holding on tight and not selling a thing.
However, right after showing all that confidence, he hits us with a really stark warning. And this is for anyone who's just thinking about jumping into the silver trade right now. And this is so important to hear. Silver is not for the faint of heart. It has a history of absolutely brutal crashes. Twice in the last 50 years, it shot up to $50, only to come crashing all the way back down to $10. That's an 80% drop. So yeah, this is a very high-risk game.
So you've got expensive stocks, you've got volatile commodities, you've got a whole lot of hype out there. How in the world are you supposed to position yourself for the next couple of years? Well, the experts actually laid out a surprisingly simple and timeless playbook.
It really just boils down to 3 core principles. First up, set realistic expectations. The days of easy, crazy high returns might be over, so aim for growth that's more in line with what companies are actually earning. Second, you have got to control the FOMO, the fear of missing out. Chasing what's hot is a classic way to lose money. And third, and this might be the most important one of all, practice smart asset allocation.
One of the most powerful takeaways was this very observation. And what it's really getting at is not some complex financial strategy, but a deep cultural wisdom. The simple practice of consistently buying and holding real assets, like gold and property, generation after generation.
And that is the whole point of asset allocation. It's the most reliable way to build wealth over the long haul and protect yourself when things get rocky. It's really just the classic, don't put all your eggs in one basket idea, but my goodness, it is so, so true.
Ultimately, after you sift through all the charts, all the predictions, and all the hype, it leaves us with one final thought. Maybe the most valuable, most powerful tool any of us has as an investor isn't some hot stock tip, but just the simple discipline to stick to a good plan. What do you think?